I'm Olivia Bono-Voznenko for Modern Wall Street, and we are partying like it's 1999. The major indices all hit record highs, something they haven't done since then. And here to celebrate is Stephen Guilfoyle. Hey, Sarge, welcome to the party.
I am more than glad to be here with you, Olivia.
Thank you. What's causing this crazy trade?
Is it crazy trade? I mean, at first it was something of a reaction to the election. You had the fiscal spend, the expectations of fiscal spending, the expectations of growth, the expectations of inflation, but it's broadening out now. All right, the sectors that led soon after the election are holding their ground, but other sectors are taking the lead. Certainly, OPEC is part of this, as there's speculation on whether they'll come to some kind of agreement next week, which is starting, if it actually does take shape, to look like a production cut, not so much a freeze, but a cut, going back to the numbers from September. That's why you've seen such movement today. We had words from the Nigerian official that actually pushed prices higher, and then the Iraqi official kind of squashed the whole idea because certain members do want exemptions. I myself don't think they'll come to a satisfactory agreement, but the market decides. I don't.
That's true, and I thought it was interesting to see the Russell, the small caps, do so well with the looming rate hike. Can you explain that?
Oh, sure. All right. As small caps, they're not as exposed to international trade. Some of them don't even do any business outside of the United States. Therefore, they're not as, plagued, if you want to say that's the word, by the strength in the U.S. dollar. Also, with the probable coming of reduction in regulation and corporate taxes, there's a lot of, I can't say there's a lot of room for the Russell to run because it's already run a long way. But it does appear that the Russell and certain other areas, the financials, within the financials, maybe consumer finance, the banks, and a few other things, let's say, within the industrial regions, such as aerospace and defense, railroads that will benefit by increased trade. We have some legs here. I think that the market can go considerably higher. I put in my note the other day that I think 2,300 is certainly possible for the S&P 500, and within minutes, I realized I had been trumped by Deutsche Bank. Trumped by Deutsche Bank, because they went out and said 2,500 was possible, going 200 points higher than I went in my notes. So certainly there are some animal spirits in the marketplace right now.
So what kind of holiday trade are we going to see with Thanksgiving this week?
There's a lot of macro tomorrow. Mm-hmm. Durable goods orders, we'll see that in the morning. We'll see oil inventories. We'll see natural gas inventories. We'll see a home price index. There's a whole lot out there. And next week there's a lot too. So I think we've seen some reduced volumes this week, and that'll probably continue through tomorrow. And on Friday, I don't know if you'll see that much volume at all, which sometimes leads to a very volatile session. But I think we have to look to next week when we get the GDP and some inflation data. The CPE, Corp CPE, will come out next week. There's a bunch of numbers that we need to look at that may or may not impact the marketplace, because it does seem that the Fed is set in their ways. The probabilities of an increase are now 100% for December. So I guess the only way they could surprise us on December 14th would be to increase the Fed funds rate by a half instead of a quarter.
Well, Sarge, I am very thankful for you to meet with me today. Happy Thanksgiving to you and your family.
Happy Thanksgiving, Vaz.
Thank you, Sarge.